fraudulent financial reporting, which is most often committed by management. Misappropriation of assets, which is most often committed by employees. That doesn't mean that store manager doesn't steal. Then we had gone through the fraud risk model or fraud triangle introduced by Donald R. Cressy. He was an American penologist and criminologist. He had developed a model wherein he confidently said that there are three characteristics, three elements, or three components which are present in all fraudulent cases, but you may not be able to see them before a fraud is reported. So you should look for red flags for this. They are opportunity or a perceived opportunity, a pressure or a need or a perceived need, that can also be called the motivation for committing the crime, the fraud. Uh, it can also be called the incentive to commit the fraud, to perpetrate the fraud, right? Then, in addition to that, the individual should be rationalizing his crime, his attitude, the justification he would give for perpetrating or for going about committing that crime. So, financial pressure or incentive or motivation, that is one thing. Opportunity to commit fraud is the second one, and rationalization or justification is the third element of fraud. All these three characteristics should be present in every fraudulent situation, but they may be hard to observe. Even if none of these three characteristics seem to be present in an organization, the risk of fraud cannot be completely eliminated. This is a better depiction of that fraud triangle, because here it says that when you see all the three elements, it's the high risk. When you see any two elements, this is medium risk. Then when you see at least one factor, that is also a risk, right? None of this also you cannot rule out. That's it. The opportunity part of the fraud is the only characteristic of fraud that can be controlled by management or the organization. Others, you should really try to develop a congenial work atmosphere, a participative style of management, and a good ethics education, in addition to having a well-defined code of ethics. All these things can really help you, but opportunity part is the only characteristic of fraud that can be effectively controlled by management. By designing and implementing proper internal controls within the organization, you can really plug the opportunity for committing that fraud. That is the next subunit. We'll go into that. I never thought that was there as such. I underestimated the class timing. I would finish up this everything by 1 hour, but probably I may be. But I did not, because those things are covered in part 1 of the examination. So whenever I think of that portion, I associate mentally with that, although this has been there for so long. When we were leaving, actually, we were discussing the investigative resources and techniques. Investigative resources when you go for a resources and techniques when you go for a fraud investigation. You see that documents provide a key source of evidence in most fraud investigation. Okay, so but you should have an eye to really see what message the documents are really giving you. So you can really see that these documents should be tested for authenticity, Then when you go into that, actually they will have some fingerprints left that you can identify the source of the crime that we have discussed in detail. We will continue that discussion. Let me see anybody else has joined. Parvati, I'm not able to give you video access. Anyway, you don't utilize that, but still I'm not able to give you that. Okay. Another source is public searches of information. Like so much of information are available free of cost. Actually, you can really see uh, the judiciary system giving the details of all cases, like they have disposed of, or if you just give the OS number or anything, you will get the details of the cases, right? And then there are so much of public information freely available. You should know, like how to search for that, and those searches may uncover so much information. Actually, you can really see one particular client, how many times he has married, and how many times he has divorced. All those things you may be able to really find out through public searches. And of course, if you pay money, you will be able to get any registered document from the SRO, right? Litigation history, I just told you, like now that it's freely available on the net, even otherwise also you can get the information. And so much of information in India, at least, like you have the public, what is it? Right to Information Act is there in India. Like that, several law may be there in any country. You can get hold of the information. Probably there may be a fee. Uh, there are like so much of public information, like bankruptcy information, non-delinquent information, like that. So that will really help you to have some kind of understanding about a particular person or situation. Then, of course, you all know that Facebook, Orkut, all those things are social media is a very potential source of information. You can really make use of that. Actually, like what is the lifestyle a person is having, or does he? I mean, you can really see his financial pressures, needs, everything. Actually, when you go through his site, actually, like if a person is really uh, involved with substance abuse, and if he's, then of course he will have some financial pressure or a perceived need to really get money to meet his drug abuse needs, substance needs. And even while appointing a person, like when you talk about the ingredient like attitude and all, it is the character of the individual. Like when you go for appointing a person also, it's a good thing to go for social media search, because a person leading a very extravagant lifestyle may not be suitable for the low amount of salary what you give, right? So you can really, that's not a fraud investigation tool, but this tool can be effectively used in fraud management in many ways. That's what I'm saying. Social media is a very potential source of information. When you go for fraud investigation, you can like you will see like the places he has visited in the last few months. All those things you will be able to really see them. Then when you go for the public searches and the records available, those agencies will have some kind of privacy concerns, restricting the release of certain records. Like say, for example, if you go approach a hospital for the medical records, they will not give you that. Similarly, banking records, trust records, telephone records, they are all like well documented, but they don't give you just like that. You may have to get proper summons from the authorities to get those details, like passenger list, stock ownership. All these things are well documented. If you have the sufficient authorization, you will be able to get that. So you should go for that. And then there are so many commercial spying agencies, commercial online services to do the work for you. Many of them uh, may not be very legal, but there are legal channels also, right? You can approach them to get your work done. some of them are really experts in electronic evidences, all that. So they should be of very good help for you actually, like handwriting experts. They will be able to help you like that. So there are so many commercial online services you can make use when you want to collect information or go about fraud investigation. When it comes to electronic evidences, you should have some kind of technical knowledge actually. Like we all know that the computer files can be easily deleted, but it's more than easy. I mean, in fact, it may be easy to delete, but it will be very difficult to completely delete a personal information. Like when you delete a file, that will be there in the trash, right? You, what is it, recycling? You can always retrieve that. But many of us actually we only know Windows and uh, the operating system which is visible to us outside. But even when you delete that from the recycle bin, a user with not so much advanced computer knowledge can undelete that going into DOS, right? You don't require so much expertise to do that because most of us know only going up to Windows actually, but though they are there in the DOS, you can undelete that. But believe it or not, that even after you format the hard disk, there are experts who can retrieve the information from formatted disks. So you can get the assistance from the experts to do that if it's really needed. And then like you have certain track of when the last, because see most of us actually when you go into that like source, who was created, when the file was created, like especially who was created, all that is there in that file. But those fields are easily editable. The people who commit fraud would have really uh, changed that also, right? So all those things you should be knowing. You should not go for any false positives in these cases. And then another important source of information and a very good source, very good resource for fraud investigation is interviewing people, talking to people. Of course, documents talk, even when people are silent. But then when you go ask people there in the organization, most of them will open up and give you so much valuable information in your fraud investigation. Some people were, I mean, you would feel that they were waiting for somebody to come and ask them. Like a parrot, they would say everything what had happened. So that is an easy way to get it. But the interviewer should know how to get the information from the interviewee, but many people do not know how to interview others. So instead of getting information from the interviewee, they would divulge information to those people. That also can happen. So you should know how to interview people and get information. That's the what do you say, like skill you need to develop as such. So the interviews should have sufficient length and depth to uncover relevant facts, and you should really have a good way to exclude irrelevant or useless facts. It should be objective and impartial, right? Then it should be conducted on a timely basis. More importantly, as I told you, it should allow flow of information from subject to the interviewer, not from the interviewer to the subject. And while you talk to people, it is very difficult. No doubt, it is very difficult to really understand whether they are lying or not, right? If you really have, there are polygraph tests, all those things, but still you can get some verbal cues, non-verbal cues, verbal and non-verbal cues, both. Like say, for example, when they say yes, but their head nod as if it's no, or vice versa. That is like, like instead of giving you verbal response, you may shake the subject may shake head rather than verbal response. But again, all these things, like they are giving so much examples here. In all these cases, you should understand that some behavioral tendencies would be there. For there are some people never uh, give you verbal response; they will only give you shaking head, right? That is their behavior, normal behavior. So you should not really read too much into it. But still, these are all signs that the person may be lying. So you should have an eye for it. You should know, like how what you can take it as a cue and what you cannot. And you should also appreciate that there could be false positives. Okay, so responding to the interview, like, did you do that? Yeah. Otherwise, what? Like that. But that's the way normally some kids answer to their parents even when they are normally talking also. Like responding to the questionnaire, with the person who is asking with another question. And some people, when they lie, they may be sweating so much, but I have seen people sweating all the time actually. Even while having their food, they have sweat all over their head actually. So sweating is another sign. You can really see that they are having some tension and they are trying to hide something. You could probably uh, take it as a non-verbal cue. Then another thing, like instead of looking at your face, at your eyes, they may be avoiding that and looking down or looking somewhere else. That could be a sign that they are lying. And then another, when they sit and then talk, actually, like they will be restless. They will be shifting their weight to this side, that side, and they will be fidgeting with some objectives or with their own hand like this. All these are signs that they may not be very comfortable answering your question. They may be like the stress of the interview or cultural differences could produce false positivity. You should be very much aware of it. So going into that, there are 2 points you should really be very careful and you should appreciate. One, the fraud committed by the normal employees, average employees, are easier to uncover than fraud committed by management. Because management might be having all the means to cover it up. The management override of the controls can be there. So fraud committed by what do you say, like an employee may be easier to be uncovered than fraud committed by management. That is. Then fraud committed by a single individual may be much easier than much easier to uncover than fraud committed by a group of people, because a group of people, when they collude, they will know how to cover it up. There may be better planning what to talk to the investigating authorities or that, right? So the fraud committed by a single person would be easier to be uncovered than fraud committed by a group of people, right? This point I will again go through that when I talk about the internal control. There we will talk about segregation of duties. The very idea of segregation of duties is that actually one person's error or fraud would be uncovered in the ordinary course of business instead. So I'll talk about that in detail because that's really important, but that's more important in the part 1 than in part 2. But we will still go through that. So with that, I have just covered the fraud and fraud risk model. We will continue this. Actually, I have told you that the internal control activities are aimed at uh, plugging the opportunity aspect of committing fraud. So we will go in detail about that in the next subunit. This is just a summary of one of the uh, like uh, study unit there, part 1 in the internal control. So we'll just go through that in detail. I mean, in sufficient detail to cover that, but not so elaborately as we cover it in part 1. Here is the sentence: internal controls are designed to prevent or detect fraud. That's a correct sentence, right? But then when that comes as a choice in the examination, multiple choice question, you cannot prevent fraud. Although it's correct statement to say that internal controls are designed to prevent fraud, and because of the concealment aspects of fraudulent activity, the controls cannot give absolute assurance that material fraud will be prevented or detected. That is true. So this sentence is absolutely correct, but when you just excerpt this one sentence and give it, it's a false statement. Because the institutes, the professional institutes, not only the IMA, all these institutes really want to make you very much aware that you cannot prevent fraud, right? You can only try to mitigate fraud. But actually, when you try to prevent, you will be mitigating. But still, when it comes as a choice in the examination question, beware of this word prevent. You cannot prevent. You cannot eliminate, right? You can only mitigate. But actually, you are trying to mitigate, you are trying to, so the English is correct, intention is correct, everything is correct, but still you should be careful when it comes an examination choice, multiple choice question. Okay. So why is it so? Because first of all, like when you design a control, you are seeing the benefits of having that control exceed the cost of it. This benefit cost is an estimate. Your judgment can go wrong. That is one thing. And even when you design a control, uh, the management may be in a position to override those controls. That's second thing. And then even if the management is committed, everything is working well also, there may be control breakdowns that whatever controls you have been for some reason or other may not be there for all throughout the period. The controls it's like a chain I told you in the last class. A chain is as strong as the weakest link in that chain. So if the control breakdown is there for a week, that may be good enough for any big fraud to happen, right? So control has to be there all 365 days, all 24 hours, like that. Then only you can say that there is absolute assurance, at least in that aspect. But that may not be the case. So there are many aspects which should really result in breakdown of control. And then another thing, you may go for segregation of duties. All those people may collude. So then those designed controls may not be operational, right? That is it. Then we are going in detail about the controls, but before that, let me introduce segregation of duties, because in this talk itself, I have talked about that at least 4 or 5 times. So let me explain what is segregation of duties. Segregation of duties is the arc of a group. Ark, Christians may be able to appreciate that word ark, actually Noah's ark or that, but this spelling is AR. But anyway, it is ark. Even this ark also is very relevant to Christians, because when it is Noah's ark, after the flood, Noah has seen an ark, the rainbow. What was that rainbow signifying? God is giving a covenant to people that He would never again destroy the world through a flood. Right? So it's a protection. Ark is a protection. Segregation of duties is the ark of accountability. Actually, this is what we call it as accounting controls. Ark. Ark. Authorization, record keeping, and custody. These three functions should be ideally done by three different persons or three different departments right? So that the fraud committed or perpetrated by an individual or a department, right, will be either prevented or detected and corrected in a timely manner in the ordinary course of business. That's so authorization, record keeping, and custody related to a transaction should be ideally done by different individuals or different departments so that the fraud or error fraud perpetrated or error committed by an individual will be either prevented or detected and corrected in a timely manner in the ordinary course of business. Like while it is performing, another person is checking, then it will be getting corrected. That is the meaning. So these are the conflicting functions: authorization, record keeping, and custody. A person who is authorizing a transaction should not be doing the record keeping corresponding to that. A person who is keeping the records or authorizing a transaction should not be having custody of the related asset. But then it is good if you are having another person or another department to verify or reconcile on a timely manner the actual assets with the recorded assets. So that is what is called reconciliation. So reconciliation should be ideally done by another party who is not involved in any of these, or at least in the record keeping and custody of functions. Reconciliation is not a managerial function normally. So we'll say that a person other than who is keeping the record or custody is ideal for the reconciliation, for verification of the assets with the recorded assets, the physical assets with the recorded assets. So ARCR also you could say conflicting functions, but that is the view our CMA IMA curriculum. But actually speaking, when you talk about accounting control, most of the textbooks cover only ARC. But in here you can add one more to it, ARCR: authorization, record keeping, custody, and reconciliation. Because it's good that all these four functions are done by four different persons for control purpose. Persons for the control purpose. Right? You can really see who in like various accounting. In part one, we are going in detail about it. For various accounting cycles, how these controls are getting designed and implemented. You take, say for example, purchases. Who is giving the authorization, or which department is giving the authorization? Purchases department. So let's say purchases payable cycle. So purchases department is giving authorization for the particular purchase. Now they have a procedure for that. They will be getting the intent from the departments, or the inventory control would be giving them indication that you need to purchase because the reorder level has reached. But the authorization for the purchase is given by purchases department. Who would keep the records regarding the purchases? Once the invoice is done, it would be sent to accounts payable department, AP. They would be having, so when they get all the records, once the PO is done, they will be getting, once the goods is received, they will be getting good receipt not. When the vendor is giving you invoice, they would be giving that. So they will do the PO matching, all that. That's what, see, before they authorize a payment, before a vendor is credited, they would be matching these documents: purchase order, the invoice, and the good receipt note. And then of course various other documents also would be there to support that, like lorry receipt, the transportation document. So many things are there, but at least these three documents: purchase order, invoice, and the good receipt note. So these are there to be matched. That is what is called PO matching, and they would be having all these records with them. accounts payable department. In this accounting cycle, record keeping is done by AP department. Who would do the custody of this? What is the asset there? The assets involved in this are the inventory and the cash. To the extent of inventory, who is having the custody? Warehouse. To the extent of cash, who is having the custody? Treasury. Right? But mainly it is inventory, so it's warehouse. But if you are worried about the cash aspect, cash is never kept by AP department. It is the custody of the check, everything, the signing of the check authority in big organization is done by treasury. Then reconciliation. Who would do the, what is the reconciliation you are talking about? The recorded asset with the actual assets, right? So as far as inventory is concerned, the reconciliation is done in big organization. They will be having an inventory control department. That inventory control department also ideally should be reporting to the group controller, financial controller. But this is all big organization and organizational structure. That itself is a topic in part 1. We will be doing that. We will be doing that in the part 1. But forget about that. But now you understand what is segregation of duties. So internal control, sorry, inventory control, it will be doing the warehouse physical goods verification, and then they would be keeping, so reconciliation, yeah, you cannot say that. They are also the record keeping related to that's what. So reconciliation should be done by, say for example, for the cash, definitely the reconciliation would be done by the GM department. And you can have reconciliation of the physical goods, physical verification. You can have a team set up for that. They can do that. So inventory control department also can really give, because they are not involved in the custody. They are not there in the normal. They are a third party to that, so they may be able to. But when it comes to cash, then GL department, the bank transactions and the bank account, the payable transactions, so the check pay is really cleared, all those things. GL department would be doing the reconciliation. The idea is that actually the person having custody should not be verifying that actually. But there is nothing wrong in he himself verifying that. That is another control. Like these are all good controls. Conflicting functions should be done by different people, but he, like in my own interest, I am seeing that everything is correct is an additional control, right? So any further segregation is really better. But these are all the minimum we are talking about. But minimum also, I should say that in certain organizations it may not be practically possible also, because the size of the organization may be too small for segregation of duties to be practical. So you understand, you get an idea about the ARCR to be done by different persons. So you can really see this in different cycles, a payroll cycle. Who would do the authorization? HR would do the authorization. Who would keep the record keeping? Payroll department. That is actually, when you see bigger organization, payroll department is coming under the accounts department, not within the HR department. They would be preparing the check, this thing, but the signing of the check will be done by treasury again. That here, as far as there is no ambiguity here, payroll department, the custody is only cash and bank, right? So bank means all the controlled documents. Cash means the physical. So that is, the custody is with the treasury. Reconciliation is done with GM, because there is only one asset involved here, the cash. It's relatively simple. But although I said relatively simple, some organizations have got some practical difficulty in appreciating that the payroll department is independent of HR. But actually that should be the case, because HR is actually authorizing the payroll. I mean, authorizing the salary, they are giving out the employee contract, everything, entitlements, incentive schemes, everything is approved by HR. And payroll would be getting all the necessary documents of the person's working, his time sheet, everything, and then compiling his payroll, what is his entitlement for the month, and they'll be preparing the check, but the check would be normally printed in the treasury because treasury is having the control stationery with them. At least the signing authority should be there with the treasury. And the cash handling only should be, cashiers should be reporting not to the according to CFO, I mean not CFO, financial controller, but to the treasurer if there is an organizational structure like that. Because treasurer is supposed to be the owner of all these financial assets there in the organization. And then the GL the reconciliation between the bank account and the I mean the real bank balance and the transaction bank account should be done by the GL department. They will have people assigned to do the reconciliation. So that is the ARCR there. So this is what we mean by segregation of duties. This is actually segregating conflicting functions done by different people so that the error committed or fraud perpetrated by one person will be either prevented or detected and corrected in the ordinary course of business. Right? That is on a timely basis. So that is what we call it as segregation of duties. Now, I've told you that ARCR, but when you see ARC as the segregation conflicting function, definitely independent checks and verification should be done. That should be ideally done by somebody other unconnected with the original transactions or without custody of the assets involved. And when you go for this independent checks and verification, physical verification of the physical assets with the recorded assets, if it's not tying up, then you can be sure that there would be some errors in the accounting, right? You have the physical verification of cash. If the GL balance is not tying up with the actual cash, there are some mistakes, there are some errors to be found out, for sure. But even when it is tying up, it doesn't mean that everything was correct. One transaction completely omitted may not throw any error in the reconciliation. Physical verification would be showing that okay, this is the GL balance, this is the actual balance. But one transaction completely omitted, there are many situations like that. So when it is not reconciling, when it is not tallying or not getting reconciled, you know that there is a problem. You have to really find out and reconcile it. But when it is exactly matching also, the converse is not true. That's what I'm saying. And then, of course, how much of physical verification you can go for, everything depends on the nature of that particular item or situation. You should really see that the cost should not outweigh the benefits. If it's a very valuable item, probably you may have like cash, so susceptible to fraud. You may go for a daily cash verification. Uh, some of the items are very costly and individual units are really costly, so you can go for weekly verification. Some of the items you may go only for an annual verification, right? Because it's low value, and then the cost of really physically counting that might be very prohibitive because considering the nature and size or the value of that item. That's it. So that's about the independent checks and verification. So when there is a discrepancy, whether when you go for physical verification or go for bank reconciliation, if there is a discrepancy, appropriate action should be taken on a timely basis. When it comes to independent check and verification, another important uh, another important what do I say like facility you can have is pre-numbered forms. Like that's a very good control. Like that can really ensure completeness of a transaction. If your cash receipts are pre-numbered, right? Then if any of the cash receipts are, you can really see, okay, cash receipts from 205 to 295. These are the cash receipts accounted in this week. 205 to 295 are the cash receipts accounted in this week start, and then if any of those receipts are not accounted, then you will have to really see what happened to those receipts. Probably that it may be like some errors there, they would have cancelled it. If they cancel, they should keep the cancelled receipt there. Any pre-numbered forms is a good control, like say check numbers, checkbook, check leaf, checkbook, that's serially numbered. So you should see, like, okay, checks issued from the start of the month to the end of the month. If there is any check miss in that missing in that transaction listing, then you should really see what happened to that check. Probably it may be cancelled, right? Or if it is missing, it's a real problem. Somebody would have misappropriated that money. But again, when it comes to pre-numbered forms, you should also understand that pre-numbered forms issued randomly defeat the whole purpose. Pre-numbered forms should be issued in a serial order, then only it will give you an assurance that it is complete. So pre-numbered forms assist in reconciliation because it is easier to establish the completeness of the records, right? But pre-numbered forms issued randomly defeat the whole purpose. So that is it. Now let's go for so you can have like many types of safeguarding controls, like controls, like you can say uh, the items, like certain items you would have to have some kind of physical controls. You can have security or a guard in front of a building, right? So they would see that unauthorized people are not accessing to your assets. And if you have a security, then that may prevent people from stealing those documents. But so certain documents are or certain assets, it's not good enough if you keep the physical control of it. Say for example, land. You may be in land and building, all that. You may be having security there watching 24 hours that the building is there, but the ownership can be easily transferred while the security is sitting there in this SRO. So the title documents also should be kept carefully. So that's also an area where people commit fraud, and then while you are having it, they take the documents and they take a loan with that document. So those title deeds, everything should be kept very carefully. That um, and then when it comes to the IT field, it's not only the physical control of it, the logical control of it, the access controls, everything is very important. So that can also really uh, cause so much damage to the organization. The organizational information, how to control that, the network controls, access controls, the physical controls there, everything is very important to safeguard your assets. Now, there is a good discussion about the types of controls, right? The accounting controls, the internal controls. That's well detailed in part one, but I'll just briefly touch upon it. The controls could be classified into primary controls, and when it is not primary, other than primary, but the people have got a tendency to say secondary controls. Secondary or tertiary, whatever, does it really matter? But primary controls and secondary controls, other than primary. In addition to primary, whatever controls you are having is secondary control. And again, primary controls can be classified into preventive control, detective control, corrective controls, and directive controls. But actually, like different textbooks would be taking it different way. But IMA Lois is asking you to really see the primary controls: preventive, detective, corrective, and directive. So we'll go in that way of classifying. But some of the textbooks would say preventive and detective. And corrective is not a control, but corrective actions, they would say. Directive, they may not even call it a control, but that's also control actually. Like things are done in the way it should be done actually. It's one way to ensure that. So there's nothing wrong in this classification. So we'll go in that order. So preventive control. So controls could be classified into primary and secondary. Right? Primary controls could be categorized into preventive control, detective control, corrective control, and directive control. What is preventive control? Preventive control deter the occurrence of unwanted before it happens. Deter, right? So preventive controls deter the occurrence of unwanted outcomes or unwanted events. What are the examples? Like storing, setting a locked safe. It will prevent people from stealing that. Right? That's an example. Segregation of duties, what we have just discussed, is a way to have good control, meaning it prevents one person to commit error or fraud. It will be prevented or detected, corrected. The thing. So segregation of duties is a very good example of a preventive control. Right? When you get mails in the mail room, especially when people, I mean, in the era where you are getting the checks through the mail, some of people may not even cross that check. Some people may not write the name. So some people might be sending you cash check. So these can be misappropriated so easily. So it's a good practice to have two persons to simultaneously receive that mail and then record that, all those things. So they are all preventive controls. There are many examples that we give you password protection. That's a preventive control to ensure that unauthorized people are not having access to it. Password protection is a preventive control. And there are so much input validations, like when you enter uh, in the name field some new numbers, then of course there could be some error. So you can prevent that. Like you can have reasonability check, logical checks, all those things. An alpha field, you should not have a number there, and numerical field, you should not have alphabets there, like that. The input validations are a good example of preventive controls. And there are so many process controls also which should really prevent an error or a fraud before it happens. So when you get the error prevented before it happens, right, you are deterring the occurrence of that unwanted outcome. So those are preventive controls. So you understand the examples, everything you can give, right? Then dictative controls alert proper people after the unwanted event, but they are effective only when detection occurs before a material harm has occurred. For example, a good physical example is burglar alarm, right? It will alert proper people when there is some attempt of a burglar trying to break open the door. It will raise the alarm so that the security or whoever around can come, and then they can avoid further damage, right? So that is detective control. So it alert proper people after an advantage, but before which it is effective before a material harm has happened, right? That is detective control. Your bank reconciliation statement is a dictative control, right? But you do it on a timely basis so that you can follow it up and take timely action against that, right? So bank reconciliation statement is a detective control, right? Then your inspection, like when you in the production line, the quality control inspection, so that is a detective control. If there is anything wrong, you can really avoid that. Actually, you can remove that from production line. That's a detective control. What are the other examples given there? The batch invoices submitted proposing may be rejected by this thing. That's a process control. That is a dictative control. Hash totals will ensure that the completeness of the entries. That is a dictative control. Then burglar alarm is another example that I have told you. So you can have many dictative controls there, examples you know very well. So preventive controls and dictative controls, you can easily identify. You can give many examples, or you shouldn't be having a problem. So that's the normal classification of primary control. But then you can have corrective controls. Corrective controls is actually after you detect, you take corrective action. That is corrective action. But that, as a part of the control process, when you're having it, there's nothing wrong in classifying them as corrective control. So corrective controls correct the negative effects of advantage. Example is a requirement that all cost variances over a certain amount be justified. That is an example given there. When I was talking to you about the bank reconciliation, that's a dictative control. But bank reconciliation and follow-up, when you say, it is a corrective control, right? Inspection is a dictative control, but inspection and rework, when you say, it is a corrective control. So it is like how it's worded, it can be really changed. Thinking about it, like you see that confusion actually. Bank reconciliation is a dictative control, but bank reconciliation and follow-up, when you attach it, it can be classified as a corrective control, right? Inspection is a dictative control, but when we combine that with the rework, a corrective action coming to it. So when that is embedded in your routine activities, that's a corrective control also. But some better examples, when I think of it, insurance, it's a very good corrective control. Like insurance, because insurance doesn't prevent it, insurance doesn't detect it, but when a damage has occurred, it will negate the impact of that, right? It will really give you some kind of comfort in that. It will correct the negative effects of the unwanted event. Insurance, right? If you have fire insurance, that will not prevent fire, that will not detect fire. But if you do something, some compensation from the insurance company will be there. So insurance is a good corrective control, good example of corrective control. Another example I could give is the backup of data. I mean, I'm just looking for some example where you would not have a problem in mixing up with other controls, right? It's not needed. You can always give, depending on the wording of the question, you can always find out. But I'm just giving you some examples which are really a good example, would be really classified as a corrective control. Data backup. The backup, if you have it, will it prevent like loss of data? No. Will it detect? No. But if there is a loss of data, you can restore the information from the backup. So data backup is a corrective control. Insurance is a corrective control. Then directive controls. Directive controls cause or encourage the occurrence of desired events. Right? Directive control cause or encourage the occurrence of desirable event. What's the example? When you go for any textbook to find out the example for directive controls, you will always see policies and procedures. Policies and procedure manuals are common examples for directive control. It is telling you what is desirable behavior, do's and don'ts, all those things are there. It will encourage the occurrence of desirable events. It's directive control. You need to have that kind of control mechanism there. The policies, procedures should be there that will encourage desirable event. So that is a directive example. Another example, actually training is a directive. So training, ongoing training, if you're having, that's a good directive control. Job description, like procedure manuals, you can see have job descriptions as a directive control. Another example that I can give you, which would not really fit into all these things, but squarely will come into directive control, your incentive scheme what you're having, right? That will encourage people to do the right thing, to do more and more. Incentive scheme. That's a directive control. It causes or encourages the occurrence of desirable, which the incentive scheme what you're having. So that's a good example of a directive control. Okay. But anyway, some textbooks you may not see this classification and this classification, but now you understand what are the four primary controls categorization. This way you can give examples also. Then, yeah, you wanted to ask something?
Yes, sir.
Yeah.
Sir, actually, I just gone through this textbook and I tried to do an answer. Okay, here what was that? Some user manual.
Hmm.
I mean, user manual means just one. I think some software user manual. So I answered as a directive control, but the
Yeah.
answer was preventive control.
Yeah.
So
That issue is there actually. That is why I told you. You will have that. How the question is worded, you will really see that because that is preventing for sure. That is why I said some of the textbooks don't even consider these two as controls classification. They are only trying as preventive incentive. That is why I was looking for one example where you will not have that confusion. Incentive scheme.
okay.
You cannot call that as preventive. You cannot call that as detective. You cannot call that as corrective. It is only promoting desirable event, incentive scheme, what you are introducing in the organization. That issue is there. That is why I was looking for even whatever I said can be there, like how it is worded, you can say. That is why I gave you in the corrective control, the backup and insurance. Because I myself, when you go into anything, I would say either it is preventive or detective, because there are only two classifications in most of the textbooks. Preventive.
Okay.
That is why I was thinking hard to give you example where it will not fall into the other category. Very hard to find. Very hard. I thought, and then I came up with the insurance and data backup for corrective control. And directive control, it is so hard actually. Even now, thinking of it, I get only the incentive scheme as an example for directive control. Uh, Everything else, like if you see another aspect of it would be coming. I think ideally, as thinking about what you said, one would classify the primary controls into preventive and detective. But even that also having overlap. Like say, for example, you certain things segregation of duties. Is it preventive or detective? In the definition of segregation of duties itself, it is to prevent or detect. So you have that actually. It's not that the thing you should really see. You should try to prevent. You should try to detect. That's it. And you should try to correct. And you should try to. All these things are there in the ongoing mechanism. That's it. Okay. Uh, then other than primary, secondary. Secondary controls are classified into compensatory control and complementary controls. If you have the ideal primary control in place, if you are really having additional controls to strengthen your position, that is complementing one. That's complementary control. Whatever control, you have segregation of duties, in addition to segregation of duties, that's the ideal control. In addition to segregation of duties, you have some other controls there. That's complementary control. For example, you have segregation of duties of functions of the cash custody, everything. But in addition to that, you can say cashier when you deposit, get a deposit slip. Nowadays, no bank is very happy to give you the deposit slip. But if you fill up their form and ask them to sign it, they will sign it. Or they will ask you, they will give you the seal and then you use it. But that is an additional control. At least you know that this person has gone to the bank on that day because the date stamp, no? So that's an additional, that's complementing what you have. Right? complementary understood. When the primary controls are in place, right? In addition to that effective control, you have additional controls to strengthen your position and strengthen your controls. Then that is complementary. Whereas compensatory controls are like some other controls, additional controls you are having when you don't have the primary control. Like say segregation of duties is what is needed, but because of the size of the organization you are not able to have it. Then you can have the weekly verification, reconciliation, right, of the cash. So that is a compensatory control, right? When segregation of duties is not feasible, you can have a supervisory review, right? So that is an example of a compensatory. So you understood actually when you are not able to have relevant primary control in lieu of the primary control, if you are going for additional controls, that is compensatory. That will mitigate the ill effects of not having the primary control in place. Whereas if you have the primary control, if you want to strengthen it, because the primary control itself may not be effective, or you have somehow the primary control in effect. In addition to that, if you have other controls to strengthen your situation, your control situation, that is compensatory. So, like say for example, same thing can be there as compensatory or complementary. I'll tell you. Say for example, ideally you should be encrypting everything in your IT environment. All your email messages, everything should be end-to-end encrypted. That is ideal thing. But in the absence of that 100% encryption, if you have access controls, network access controls, or the email access controls, everything restricted, then to some extent you can mitigate the ill effects of not having the encryption. Because very rarely in smaller organizations you will be able to encrypt the files what you are sending to another party. So restrict the email access, restrict the network access. That is one way to mitigate the absence of the primary control called encryption. But even when you are having the primary control of encryption in place, you can have network access control, then it is a complementary control. So the difference is that in the case of compensatory control, you are reducing the risk when the primary controls are ineffective or absent. Where in lieu of the primary control or to cover up the ineffectiveness of the primary control, you go for a compensatory control. Right? They do not by themselves reduce the risk to an acceptable level, but yeah, that's compensatory control. Complementary control work with other controls to reduce the risk to an acceptable level. For example, separating the functions of accounting for and custody of cash receipts. This is the same example I told you. Separating the functions of accounting for custody of cash and receipt is complemented by obtaining deposit slip validated by the bank. The same example I told you. Compensatory controls may reduce the risk when the primary controls are ineffective. Example is supervisory review when segregation of duties is not feasible. Another example I give you is network access controls may be a good compensatory control for comprehensive encryption. So that is it. We have finished that study unit. So already I have taken 1 hour, more than 1 hour. Another is 8:10, but I started only by 8:06 or 8:07 like that. Anyway, let's do the questions. jealousy among group of employees. Fraud committed by employees are easier to be uncovered than fraud committed by management. Okay, this also we know. Primary controls are classified into preventive controls. Preventive controls deter the occurrence of unwanted events. Example, storing petty cash in locked safes, segregation of duties, we have covered that. Dictative controls alert proper people after an unwanted event. Example, hash totals, statistic data entry errors, burglar alarms, security camera, reconciliations, they are dictative controls. Corrective controls correct the negative effects of unwanted events, backing up data insurance, I told you. Directive controls cause or encourage the occurrence of desirable events, policy and procedure manuals, circulars, job description, these are examples. Secondary controls are classified into compensatory and complementary. Compensatory controls are otherwise called mitigative controls. They reduce the risk, right? May reduce risk when the primary controls are ineffective. Maintaining and reviewing logs and audit trails when segregation of duties is not practicable. Supervisory review when segregation of duties is not practicable. So because segregation of duty is a primary control. When that is ineffective, you go for additional control, that is compensatory control. Use of network access control and email encryption in view of comprehensive data encryption, these are examples. Complementary controls work with other controls to reduce risk to an acceptable level. Example, segregation of duty is complemented by obtaining deposit slip validated by that. Independent checks and verification, safeguarding control, physical access controls and documentary access controls, all that I know. Now, these are all next. I think we have finished up to question number 10. Now we will take question number 11. Misappropriation of assets is most often perpetrated by, give your answer in the class 1. Yeah, employees. Customers, suppliers, auditors are external parties. We are talking about internal fraud. So misappropriation of assets is most often perpetrated by employees. Not that there are no thieves outside the organization, but misappropriation of assets is most often committed by employees. Then, manufacturing entity located in a sparsely populated region of the country has a policy of leaving its raw material inventory warehouse doors open during normal business hours to optimize workflow. So everything is open, anybody can steal it. Controller for the entity has just noticed that some raw material inventory is missing. Using fraud triangle model, the controller has determined that the entity's policy most likely increase the risk of fraud by read A, B, C, and D, and then give your answer. Increasing the opportunity, yes, it increases. When you keep your door open, it increases the opportunity to commit fraud. Correct. Keeping the door open is not incentivizing employees to commit fraud, right? It's not totally wrong that employees, when it is kept open, they may be tempted to steal it. But it's an opportunity more than that. So you will have to really see the question from the angle of best choice.
Sir, B is also a likely option, right?
That's what I said. A is also a likely option, not only B. Incentivizing, not incentivizing, actually it is tempting employees to commit fraud. No?
And they can rationalize as well, because if it is kept
Exactly.
open, anybody can take.
Yeah, but then you didn't have any trouble in finding the best answer, no? You are the
Yes, sir.
first one to give that. Yeah, that's the thing. So it is like uh, that's why it's given most likely. Using the fraud triangle, controllers determine the entity's policy most likely increases the policy of keeping the doors open. Most likely increase the
Sir, in case
fraud.
instead of most likely, if they used any other word, I mean,
Yeah, then it will be ambiguous. You cannot.
inambiguous.
Yeah. See, incentivizing, you're not really incentivizing, but
Sir,
if you really see that's a temptation, definitely, like if things are kept open, anybody would really feel like tasting it, right? So, increasing the ease of rationalization of the fraudulent activity, you can actually assist the employees to perceive a financial, that definitely is wrong. So these things are remote, but this is the you are now having the easiness to commit that fraud.
Sir, I have a counter objection on that. Why? Because the question says that the has a policy of leaving its raw material inventory warehouse open during the normal. It's a policy.
Hmm.
Okay, if it is a policy that it's not that everyone, but it's a in the policy itself there is an opportunity. I
Yeah,
mean, there's a control measures.
correct. So
So
you need to plug that opportunity.
yes,
Yeah. So that policy is luring people to commit fraud. That is what he said. That policy is actually leaving so many opportunities for rationalizing your crime. That is what he said. So the best answer is increasing the opportunity. So whatever way you think it actually keeping the door open, not having it under lock and key, is increasing the opportunity to commit fraud. Then, when none of the three fraud risk factors are present, the accountant, can he rule out? He cannot rule out. Should he consider the likelihood of fraud to be high? No. Right? Then, should not rule out the presence completely? Yeah, he should not be ruling out the presence. So, see, will likely search for this thing, that's not fault finding is not your objective. You are trying to help the organization. So, C is the only answer. Right? Then, next. Is it clear for everybody? Terence, is it clear for you? Yeah, next. The fraud risk factor that may be mitigated by internal controls is this is straightforward question. There is no two thoughts about that, right? Give your answer. D. Correct. A company has strong internal control structure in its accounting department, right? The accountant plans to use these funds to sustain this. Using fraud triangle model, what is the best assessment of fraud risk for the company situation? Using fraud triangle model, what is the best assessment of fraud risk for the company situation? Low, medium, high. So when you say fraud risk model and low, medium, then any two coming, it is medium. All the three coming, it is high. Any one, it is risk, right? A low risk. But none are there also, you cannot rule out. That's what we said. So read it. A company has, you are giving medium because opportunity is absent. Okay, let's read that. A company has a strong internal control structure in its accounting department. That means opportunity is effectively plugged. It has a degree of duty of segregation. It has a high degree of duty segregation, regular reconciliation, strict reviews, and comprehensive internal audit. So your internal control is really strong. So opportunity is addressed to a great extent. Disgruntled fixed asset accountant has been contemplating the embezzlement of cash receipt processed by accounts receivable department. Although there is no opportunity, there is a disgruntled employee. A disgruntled employee will rationalize his crime. So that means a disgruntled employee, his attitude is really not really good. So the second fact, the 1 minute. So rationalization or attitude, justification. Yeah, they have done this to me. I will retaliate. So that second, what is it actually? Rationalization is there. So opportunity is not there. Rationalization is there. Then accountant plans to use these funds to sustain his gambling progress. So he has got a need. He has got a perceived need. That's a motivation to commit that fraud. So two factors present and opportunity not there. Third factor is not there. So it's medium because the opportunity is absent. That is the correct answer. John has given it. But Terence is saying high because pressure, rationalization. Why? Where is the opportunity, Terence?
So I felt because he's handling the cash receipts, he had the opportunity to manipulate it.
Yeah, but that is why the management is having somebody has to manage cash, handle cash. So
Okay.
that is an inherently risky area. So that is not an opportunity. That is effectively addressed through internal control.
Okay.
So because of that, you have to say it is medium.
Okay.
Because the examiner wants you to do that. He's always right. Okay. Next.
A proper segregation.
Yeah, a proper segregation of duties requires that an individual ARCR should be done by different people. Authorizing a transaction records in conflicting function handled by same individual is not segregation of duties, not proper segregation of duties. Authorizing a transaction, maintain custody, authorization and custody are conflicting function. One person doing is not proper segregation of duties. Maintaining custody of an asset, be entitled to access the accounting records. So record keeping and custody of the related asset is not proper segregation of duties. Recording a transaction, not compare the accounting record of the asset, so there is no violation of the conflicting functions. Agree. So this is the only thing which could be said proper. Sami, is it clear for you?
Yes, sir.
Next. Internal control cannot be designed to provide reasonable assurance regarding the achievement of objectives relating to one question, minimum one question of this sort you can expect in both part 1 and part 2. Actually, this is a wrong statement, but still they want you to really have this. Internal controls cannot be designed to provide reasonable assurance. They are also there. They are regarding achievement of objectives related to elimination of all fraud. Even you cannot have a reasonable assurance. Right? What is reasonable assurance? But they wanted to say that you cannot eliminate all fraud. That's it. So it is that kind of vested interest that is there actually when they design this kind of questions. They want you to really have communicate to you that it is not possible to eliminate all fraud. Don't expect us to do it. We may be giving consultancy all that, but elimination of all fraud is not in our objective even. Right? It's not possible. Internal control cannot be designed to provide reasonable assurance regarding. Actually speaking, English is perfect, right? Provide reasonable assurance regarding elimination. That means it's not absolute assurance, elimination. But still, Terence, did you have any difficulty in identifying the choice?
No, so I was just trying to understand what are they trying to say. I mean,
Yeah, they are only trying to say one thing, that elimination of all fraud is not possible.